Welcome back to Investing Talk Podcast. Today, we're taking a close look at Qualcomm, examining a collection of their recent updates and a pretty detailed due diligence report from May 2025.
And you've shared these because, well, you're looking to get a handle on the key factors shaping Qualcomm's performance, right? And their future prospects, but without getting totally bogged down in the super technical stuff.
That's the idea.
So our plan here is to pull out those crucial insights, give you a clear, kind of engaging overview. We've got info from their latest earnings, future guidance, competition, market feeling, the works. Let's unpack it.
Okay, let's start with the recent financials. They had those Q2 results out April 30th. Looked pretty solid.
Very solid. What's really interesting is they didn't just meet expectations, they actually beat them. Earnings per share came in at $2.82, revenue at $10.98 billion.
And the street was looking for what, about $10.63 billion on revenue?
That's right, same EPS, $2.82, but yeah, lower revenue expectation at $10.63 billion. So
Yeah.
that beat, it suggests some underlying strength maybe analysts didn't quite see.
And the handset chip sales really caught my eye. A 12% jump year over year.
Yeah.
$6.93 billion.
Yeah.
That feels significant. Shows their core mobile business is still, holding up strong despite everything.
It really does. And if you look bigger picture, their GAAP revenues for the quarter ending March 30th hit around $11 billion. Plus, the QCT division, that showed really robust growth. EBT up 25% year over year.
That's a decent jump.
It is. Provides a strong kind of financial engine for the whole company.
But it wasn't all just mobile, was it? Their diversification push seems to be, working.
Absolutely. Automotive and IoT revenues. Remarkable growth there, both up 38% compared to last year.
Wow, 38%.
Yeah. It's a clear sign that their strategy to move beyond just smartphones is, paying off, getting real traction.
And profitability looked okay, too.
Looks good. GAAP EPS was $2.52, and non-GAAP hit $2.85. Both point towards better profitability for the period.
Okay, so recent performance looks strong. But what about looking forward? Let's talk about their outlook and the guidance for Q3 fiscal 25.
Right, this is where things get a little more cautious. The revenue forecast for Q3, it's between $9.9 billion and $10.7 billion.
Okay.
In the middle of that range. It's actually below what analysts were generally expecting, which was around $10.35 billion. So that gap, understandably, raised a few eyebrows among investors.
I bet. Caused a bit of a stir.
It did. And CEO Cristiano Eman on the earnings call, he really stressed that they're, navigating these macroeconomic headwinds, but keeping focus on the product roadmap and running efficiently.
So acknowledging the challenges out there.
Pretty much. Suggests they're very aware of potential bumps in the road, economically speaking.
But at the same time, you have Eman giving a keynote at Computex 2025 soon, focusing on new Qualcomm-powered PC tech. That feels like a pointer towards a big growth area, maybe.
It certainly could be. I mean, if you put it together, they're cautious short term, but the CEO is out there talking up PC tech. It suggests a major potential growth path, right?
Yeah.
And a continued push to diversify away from just phones.
That contrast is interesting. Near-term caution, but long-term ambition in new spaces.
It is quite telling, yeah.
All right, so strong recent numbers, a touch of caution for the next quarter, but some potentially exciting things on the horizon. How did the market actually react to all this mixed news?
Well, it was interesting. On May 12th, Qualcomm shares actually popped about 5%. They even touched near $154 during the day before settling around $152. So a positive reaction initially to the earnings beat.
But wasn't there a dip earlier linked to that guidance?
You got it. Earlier that week, right after they announced that softer Q3 guidance, the shares dropped, I think, over 6% in pre-market trading.
Ouch.
Yeah, it really shows how sensitive the market is to what companies say about the future, not just the past.
So a bit of whiplash depending on which piece of news hit first.
Yeah.
What about trading volume and the overall trend?
The volume on that May 12th jump was moderate. Suggests buying interest? Sure, but not like a massive rush. Looking back a bit, April price was around $138.70. The stock has seen big swings over the last year, high of $230.63, low near $120.08.
Quite a range.
Definitely shows past volatility. But it's been more stable lately and actually trending upwards over the past 6 months or so.
Okay, that volatility is worth keeping in mind. Let's zoom out a bit. Qualcomm isn't operating in a vacuum. How does their competitive landscape look?
Oh, it's fierce. The whole semiconductor market is. In mobile specifically, they've got strong rivals like MediaTek and, of course, Apple doing more and more of their own chip design in-house. That's a big factor.
Like the Apple effect.
Yeah.
And beyond mobile, as they push into auto and IoT.
There they run into the big established names, Intel, NVIDIA. So yeah, competition coming from multiple angles as they expand.
So with all that pressure, what are Qualcomm's advantages? What are their core strengths?
They have some pretty significant ones. First off, their patent portfolio. It's massive and absolutely crucial for mobile tech, CDMA, 4G, 5G.
The licensing income from that must be substantial.
It is. It provides recurring revenue, and it's a huge barrier for competitors trying to get in. Then there's their tech roadmap they keep innovating, and they have really strong, long-standing relationships with customers worldwide.
So IP, innovation, relationships.
Basically, yeah. They're definitely seen as a leader, especially in smartphone modems and wireless licensing.
Okay, clear strengths. But every company has risks. What are the main ones for Qualcomm right now, and what are the big opportunities?
Risk-wise, that softer revenue forecast is top of mind short-term. It's tied to those uncertain economic conditions, especially impacting smartphone sales.
Makes sense.
Then you always have potential regulatory issues or tariffs, things related to international trade. And fundamentally, they're still heavily reliant on the smartphone market, even with diversification. Plus, the semiconductor industry itself can be quite volatile.
And the opportunities on the other side.
Well, that continued growth in handset chips, the 12% jump, shows there's still strong demand for their core stuff. The move into PC chips, highlighted by that upcoming Computex keynote, that's a potentially huge new market for them.
A whole new playground.
Potentially. And the diversification into auto and IoT, as we saw with the 38% growth, is clearly working. That's a major plus.
So, managing current headwinds while chasing these big future plays. Let's look at their financial health quickly. How do the numbers stack up? Stable.
Seems pretty sound, based on the report. Current ratio is 2.40, debt to equity is 0.68x.
So, good liquidity, manageable debt.
Seems that way. A current ratio over 1 is generally good for short-term obligations, and the debt level seems reasonable relative to equity. Their return on assets is also strong, 19.04%.
Yeah.
Shows they're using their assets efficiently to make profit.
Nice ROA.
And they generated about $6 billion in net income from continuing operations over the 6 months ending in March, so strong cash generation too.
Okay, paints a picture of a financially solid company. Last point then, what's the general feeling out there? Market sentiment, analyst views?
It mirrors what we saw with the stock reaction, really. Cautious optimism seems to be the theme in investor chats. People like the strong quarter, but that softer guidance gives them pause.
Understandable.
Some analysts are saying the recent price dip might actually make the stock look undervalued compared to its long-term fundamentals. And importantly, most recent analyst ratings seem to lean towards BUY, predicting the share price will increase.
So experts are generally still positive, despite the near-term caution.
That seems to be the consensus, yeah. Seeing past the immediate guidance to the bare picture, strengths, and opportunities.
So wrapping this up, what does this all mean for you listening in? Qualcomm looks like a company with a really solid core business, and these diversification efforts, especially in auto and IoT, they're genuinely bearing fruit.
Yeah.
The latest earnings really prove that.
But that cautious outlook for the next quarter, it's a reminder of the bigger economic picture, right? Those uncertainties can affect even the big players.
Definitely. And that upcoming Computex keynote feels quite pivotal. It could give us much more insight into their strategy beyond mobile, maybe calm some nerves about future growth. It's this balance, isn't it? Strong performance now versus some caution about the immediate next step.
It really is, and it leads to that key question. How well will these expansions into new areas, like PCs and automotive, actually balance out any potential slowing in the smartphone world?
It's a dynamic situation for sure. Significant opportunities, but also some real headwinds they need to navigate carefully.
Well, if you found this breakdown helpful, please do subscribe, like the show, and maybe drop a comment letting us know what other companies or market trends you'd like us to explore.
There's always more to uncover in the world of investing.